Welcome to this next section, assets. Like, what? What are you talking about? Assets. What is assets? Well, let me ask you the questions instead of you asking me the questions. But remember, if you do have questions, we always have that question and answer section down below, and just put your questions there because I don't know that you have questions unless you ask them. So just a quick plug. Remember, we have the question and answer section and ask away. More than happy to answer your questions anytime, but I need to know them. So, assets. Do you know what your number one asset is? Let me think for a while. And this is where I'd like you to put the comments and say, oh, my number one asset is my house. Oh, I don't own a house, so my number one asset is my car. Or my number one asset is my business. Guess what? All great guesses, but not the one I'm looking for. Your number one asset is you. Like, what? What do you mean? Or maybe it's your spouse. Depends. But it's really not necessarily you, but your ability to earn money. Let me give you a quick example in the intro here, and then we'll get into the meat of it. As an example, I'm 45 years old. I'll try not to hit my mic. I'm 45 years old. I have 20 good years of earning still. I can earn still after I'm 65, but let's say I'm going to work full time, go hard at it for the next chunk of time. So 45, 65, 20 years. And I'm not saying I make $100,000. Maybe I make more. My goal is definitely to be making more, but let's just I like simple math. That's why I'm good at math, because I make it simple. 100,000, 20 years, and the answer is $2 million. Like, wow. I didn't think about that. I didn't think about it that way. Lots of people don't look at it in the big picture. They just look, oh, I make this amount a year over the course of my career, and you don't realize how much you're worth. So my earning potential is I still have $2 million. So is it my house that's worth $100,000? No, my house is worth more than $100,000. My house is worth close to $700,000. So my house, $700,000, or me, $2 million, which is more? Me. So let me ask you the question one more time, and now you know hindsight is 20/20. Now you know the answer. So your number one asset is you and your ability to earn. And that's what we're going to cover in the next lecture on assets. What's your number one asset? Well, I kind of gave you the secret, or actually I gave you the answer in the introduction. What's your number one asset? It's you and your ability to earn. But then you're like, well, why are we talking about that in financial planning? What's that have to do? Well, here's the short answer. Insurance. Yes. And it's about self-protection. So some of my colleagues would call this section, living benefits. I talked about it as your number one asset. Interchangeable. I just like mine better. So, living benefits. What coverage do you have that protects your ability to earn money? Oh, I don't know. I don't know if I have any coverage. I definitely know I have this thing at work, that I have my 9-to-5 job, and I have this thing called group benefits, so I must have coverage. Don't assume. So, what's the best exercise for you to do is, of course, sitting down with a financial advisor, because they'll actually give you what's in it for you as opposed to someone at work who says what's in it for the company. Me as a financial advisor and my colleagues, my client is you. Who do I work for? I work for you. It is in my best interest to look after your interests. And therefore, that's when I sit down with my clients and we look at what benefits do you have, and if something were to happen to you, how do we fund that? And if we go back to your number one asset, I ask someone, say, well, what happens if two things, injury or illness? So if you have an injury, what happens? So say you're out and you fall off the ladder and you can't go to work tomorrow. How do you make money? Who pays the bills? Most people say, oh, well, I'm going to go back. And remember those first two sections we talked about? Cash is king. Remember, cash is king for two things: emergencies and opportunities. And we were really driving to build up the opportunity fund. But if you have to self-fund an illness or an accident, guess what goes away really fast? Your cash. And so, oh, well, I can dip into my retirement savings, into my RSP or my 401k. And guess what? Now you're not taking advantage of compound interest because you've taken money out early to fund, again, an illness or an accident. And that's not our objective. Our objective is having coverage in all four cornerstones. We're only in number 3. We still got number 4 to go. So, all about your number one asset and your ability to continue to earn even when things happen. And you're like, wow, I'm super healthy. So let me give you one more tip on this section about, wow, I'm really healthy. Here's a couple statistics for you. We call it the big 3. Do you know what the big 3 are? Cancer, heart attack, stroke. The big 3. And guess what? 1 in 4 people, probably someday will be 1 in 3 people, that happens to them. Ouch, that's a big number. The good thing is like with our healthcare system today, about 80 to 85% of the people survive. Fantastic. I personally have not had any of the big 3. But let's say, for example, I did. I had cancer. I went, got treatment, and I survived. But I needed that time for the treatment and to cure myself. And guess what I didn't do while I was doing that? Earning money with my job or my business. If I had insurance, specifically disability insurance, I would be in a much better spot. And that's the difference about disability insurance. Disability insurance pays out when one of the big 3 happen and not life insurance. And everyone says, oh, I have life insurance. But guess what? Life insurance doesn't pay you. It doesn't pay you out if you live. It only pays out when you die. So what do you do in the meantime? And really, it's when we continue to aging population, we're healthier even longer, or we actually can have a stroke or heart attack and survive, and it just affects my ability to earn. And that's why we look at self-insurance. I know it sounds like a bit of a sales pitch. It is a sales pitch because it's my job to convince you, not to convince you really, to educate you on the importance of insurance. Because not everyone's out there to just sell you a policy. It's about identifying your need. And if you have a need, then here are the solutions to satisfy those needs. And the key is about understanding your number one asset. Because guess what you have? You have car insurance, you have house insurance, and you always pay those, right? I'm pretty sure you don't have that $1 million house. You don't not have fire and theft insurance. Your car, you're gonna have fire, you're gonna have theft or accident insurance on your car. And we just talked about your cars may be only worth 30, 40, 50,000 maybe. You're worth 2 million. Doesn't it make sense to have insurance on you? Certainly does. And that is why your number one asset is you. Self-protection. What is self-protection? Well, we touched on it a little bit in the previous one when we talked about your number one asset. But self-protection really is, let's look at your options. So, as we talked about, we identify that you are your number one asset. Or more importantly, your ability to earn is your number one asset. And how do we protect that? Well, we talked a little bit about in the previous section about disability insurance. I know there's insurance, and guess what? Some of us not all insurance guys are sleazy. Some of us are really nice guys, and we work for our client. And like I said, really at the beginning of this lecture, I said, my job is about educating. I can't sell you anything over the internet. It's about educating you. So, self-funding. And there's 2 really main types of insurance that I look with my clients. First is disability, and second is critical illness. What's disability? Well, here's how disability works. And most people in their 9-to-5 job, let's assume you have that 9-to-5 job. And you say, well, I have this group benefits insurance, and I'm pretty sure I have disability insurance with my group plan. All right, fantastic. Couple of things you need to know. One, most disability plans at work are capped at 66%. So, when we were talking about your lifestyle, can you afford to live on 66% of your income? If you can, fantastic. You don't need insurance. If you can't, then let's look at an option to fill the gap. Number two is most group plans only cover you up to 24 months. And guess what the statistics say? Remember, we talked about the big three: cancer, stroke, heart attack. How long do you think it takes to recover from cancer? How about a heart attack or a stroke? 2 years? Nope, guess what? The average is 5 years. It actually takes you up to 5 years to recover. And guess what your group plan covers you for? 2. 5 years minus 2, 3. 36 months. What do I do for 36 months? How do I pay my mortgage for 36 months? That's 3 years. We go back to cash is king, lifestyle. I'm going to self-fund 3 years of expenses? That sounds painful. Guess what disability insurance does? It covers that gap. It fills in the holes. You can have disability insurance that will pay you up to the age of 65. So, and guess what happens when 65? 65 is generally when the government benefits kick in. Old age security, here in Canada, CPP, the government programs. Generally, they don't kick in until 65, maybe 60, or you can, for medical reasons, get them to kick in sooner, but at a far less or a smaller amount than 100%. Better yet, look after yourself. And that it's going to cost you a little bit, but guess what? The cost of not having it is even more expensive. First type, disability. Second type, critical illness. What's critical illness? Well, critical illness works in a different way. So same principle, big three. Now what happens is critical illness, I buy actually a lump sum of coverage. Me personally, let's use me as an example. I've actually had my critical illness policy for almost 12 years. And you're like, what? You're 45. You had critical illness insurance when you were in your 30s? I certainly did. $200,000 worth of coverage. And I paid for the premiums. But here's how critical illness works. Again, big three, heart attack, survive at least 30 days, lump sum payout, $200,000. Doesn't matter how I get to spend it. I can go on a cruise if I want. I could travel the world for $200,000, whatever I want to use it for. Alternative medicine, whatever I want, I can use it. Lump sum, payout, done. That's the benefit of how critical illness works. Now, here's the nice sweet spot, is guess what? Both critical illness and disability, here in Canada specifically, I know for sure, because I'm licensed to sell it, you can put a rider on it called return of premium. Now, for the price of a Starbucks, at the age of 65, I get all my premiums back if I didn't use it. Fantastic. It's a forced savings, plus insurance on top of that. If I have a heart attack, stroke, or cancer, I get a lump sum payout of $200,000. If I don't have any of those happen to me at the age of 65, starting, and for sure once I max out at the age of 75, 100% of my premiums paid back. I get a check of about $65,000. And remember, we're going to say, well, $65,000 when you're 65 or 70 isn't worth the same as it is when you're 45. True. But along the way, I had the peace of mind every night when I went to bed. I knew I could sleep well because my family and me were looked after from self-insurance. It's a cost, but it's a cost I'm willing to pay personally to be responsible for my family. And therefore, if it's good enough for me, it's good enough for my clients. And if you were my client and you say, well, do you have it for yourself? And I say, no, well, if you don't have it for yourself, why would I want it? So if it's good enough for me, it's definitely good for my clients. Not necessarily for everyone. There's a need. Remember, we do a needs analysis first. So maybe you don't need it, and therefore I don't sell it to you. But when we sit down and we work through the exercises, if there's a need, we have a solution. And now you know two of the reasons, or two of the types of self-insurance: disability insurance and critical illness insurance. I am only able to work with, from a selling point of view, with people here in the province of Ontario in Canada, because that's where I'm licensed. You can, if you're located in the United States, other parts of Canada, or other parts of the world, similar to my other course where I tell you to seek out, a tax accountant in your jurisdiction, I say the same thing here. Seek out a financial advisor, a licensed financial advisor in your local area, because they'll be able to tell you more. The specifics that apply to your specific region. However, because of this course, and because of me, I educated you a little bit from a safe point of view. I'm not able to sell you anything. So, hope you found that useful. Remember, if you have any questions, put them in the questions section, and I'm more than happy to answer it, or at least direct you to someone who can possibly do it better than me if it's a specific area. Okay, it was a little bit tough, was it? That number one asset, self-protection. It's not necessarily the nice things, it's not the happy things we like to talk about. And let me just go back. I don't think I've touched on this point. Let me just add it in here. So I say my job is to get you thinking and talking about money from a point of view that's generally uncomfortable, because we like to think about the good things: planning vacations, renovations, retirement. But in the last section on number one asset, we talked about things that we hope that don't really happen. But is that wise? Is it wise to say I'm not going to have one of the big three? Do you remember the big three? Cancer, heart attack, stroke. I'm not going to have one of those happen to me. I'm going to be that 25%, that 1 in 4. The one's going to be me. And my three friends sitting beside me, they're going to be one of the other guys. Well, guess what? If they're going to be one of the other guys, share this course with them. Because just because you know it, maybe they don't. So share the course. Why not? But let's go back to what we're talking about. Quick summary. Your number one asset, you, or more importantly, your ability to earn. So do a quick calculation. You don't need an accountant or a financial advisor to do the calculation for you. How much do you earn today times the number of years you have left to work? And what's that big number? You'll be shocked at what you're worth. Now you're thinking. Step 2, disability, critical illness insurance. What does it cost? It actually, surprisingly, it actually costs more when you're younger. Why? Because you have a greater chance of it happening. If I'm 25 years old, I have 40 years till I'm 65. So I have 40 years to have cancer, stroke, or heart attack. If I'm 50 years old, I only have 15 years of coverage. So it's interesting. It's actually the opposite of life insurance. It's actually more expensive when you're younger and cheaper when you're older. But just because that's the case doesn't mean you shouldn't get it. You should get it as soon as possible, or when you have that needs analysis that says that there's a need. You have a spouse, you have children, you have other commitments and other responsibilities to your ability to earn money. And that's why you need to look into self-insurance. Thanks for sticking with me. Get ready for the next section. And guess what it is? The future.